Start streaming. Manage broadcast. No, it's not made for bloody children. Here we go. Loop-de-loo. Here we go. Loop-de-la. And we're live. Woohoo! Hey, it's Mark, and the Browns are here. Kyle's here. Oops. Old dog. Haven't heard you from a while, dude. How's it going? Ooh, all right. We're getting ready to get started. All right. Let's get this ball started. All right. Here we go. Hit the record button and Mohit with what? Oh my goodness, doing great. Way to go, old dog. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable, consistent 1% per week. Now, how do I do that? I use nothing but pre-qualified dividend stocks, and those, my friends, are any company that pays dividends and continuously increases. Double back that double circle on your list from last night. Let's double back. Oh, yeah, all right, we'll take a look at that. But as I was saying, I use nothing but pre-qualified dividend stocks. But what I buy tomorrow, we're going to take a look at what we're going to look at for tomorrow. We're going to look at that in a little bit. Let me get through the disclaimers first so I don't get myself in trouble. David, how you doing? So as I was saying, pre-qualified dividend stocks, and those are companies that have consistently increased their dividends for a minimum of 20 consecutive years. What does that mean? That means year after year after year, the companies are profitable over and over and over again. What are bad and with monthly dividends like PFLT? Oh gee, I've never even heard of PFLT, but we'll throw that in there. Kind of curious what the heck PFLT is. PFLT. Pentaplaque Limited. Never even heard of them. Now, there's a reason why I say I've never heard of them. Okay, so here's the thing. I've been trading for over 20 years. Not that I'm bragging or anything at all, but every once in a while, let me show you something really quick. I am so on the old school side, I write stuff down. Now, you guys have a consistency of sending me stocks to take a look at, like PFLT. So let's take a quick. This is next week's list. It's not very big. This is this week's week, not very big. But check a look at this. This is last week. See that list? That's last week. Here's the week before. Here's the week before. Here's the week before. Here's the week before. So on and so forth, all the way until January. See, I've been doing this since January. Here, CROX. Nicholas, I was just putting through that if there's a stock that I've never heard of, more than likely, CROX, more than likely I've never heard of it. And the reason why I've never heard of it is more than likely it doesn't have 20 years of increased dividends, or it doesn't have weekly options. One way or another, there's a reason why I've never heard of it. So PFLT, it's a monthly. What does that mean? That means every month you can only write one covered call. Now, a covered call is one of the safest trading strategies there is. So what is it that I don't like about PFLT? Well, considering it's a monthly optionable stock, which means I can only write 12 covered calls for the year. Now, I don't know about you, but weekly optionable stocks, 52 times a year. So would you prefer 52 checks or would you prefer 12? Me, 52. I don't like monthlies. The numbers never work out. Let me give you a quick example why I mean they never work out. At this moment in time, PFLT is going for $11.42. The closest strike price to that is going to be the 12. And look what it's going for. It's going between $0, 0 cents, and 5 cents. There's like no money there. And what's worse than no money being there is I got to hold it for 3 weeks. All right, I've got to figure out, okay, here's the 30-day bottom here. Where's it going to be in 3 weeks? I have a difficult enough time to figure out where it's going to be in 5 days. What makes you think I can figure it out for 3 weeks? So the numbers just don't work with monthlies. Okay, so when I say I want a safe, predictable, consistent 1% per week, which is over 50% per year, you cannot get it with a monthly optionable stock. So if the stock has monthly options, yeah, I don't even bother looking at it because it's basically a waste of my time. So yeah, this is a waste of my time. And when I say I've never heard of that stock before, CROX, never heard of it, more than likely it's going to be either a monthly, it's going to have no options at all, or it may have no dividends, or the dividends are just horrible. The only stocks I look at are those that have consistently increased their dividends. Why is it that I only look at companies that consistently increase their dividends? Well, because it's my money, number one. I'm not investing other people's money, I'm investing my own money. So if I'm going to put my personal money into a company, I have a choice every morning before I turn on my computer to figure out what stock I'm going to invest in. There's 9,598 different companies I can choose from. That's a lot. So if I'm going to invest my money, I want to make sure that the company is consistently profitable. Lucky Larry, how are you doing? So I want to make sure the company is consistently profitable. The quickest and easiest way to figure out if a company is profitable and consistently profitable is not to look at the earnings reports, not look at the company's quarterly reports. No, look at the dividends. Because a dividend is nothing more, nothing less than the investors. That's you and me. We become the investors. Once we start buying and selling stocks, we become the investors. It is the share in which the corporation gives to the investors. So if the company is consistently profitable year after year after year after year, I like 20 years. Really, I do. 20 years of consistent increased dividends. That means they're consistently profitable for a minimum of 20 years. Minimum. Some of these companies have increasing their dividends for 60, and some of them getting close to 70 years. Can you imagine that? 60 years continuously profitable, continuously giving higher and higher dividends to the shareholders? That's me and you. Those are the only companies I want to look at. So when I say, yeah, I've never heard of that company, more than likely, there's a reason why. Because this is all I do nowadays. I jump in and I take a look at, hey, who is the best companies to invest the money on? Who is continuously profitable? Now, you may see these new companies, the stock's going from, $5, $10 all the way to 35. Yeah, I don't look for that. I don't. I don't look for stock appreciation. Say, I'm not looking for stock appreciation at all. Only thing I'm looking for is cash flow. I'm at the point in my life where I'm retired and I rely on money coming in safely, predictably, and consistently. The only way I can do that, weekly options with decent companies. All right, so PFLT is a big fat no, sorry. Let's take a look at the other one, CROX, CROX. First, I gotta click on this first. Here we go, CROX. Oh, check it out, 130, and it has weekly options. So why don't I know who CROX is? Let's take a look at how consistent are they with their increased dividends. Well, to find that out, we're going to put it right here and put in CROX. All right, historical data. Here we go. Oh, that's why I've never heard of it, because they don't have any dividends. They don't share their profits. So why the hell do I want to take a look at it? I mean, think about it. How do we know they're profitable? I mean, I have to go in and I have to take a look at the earnings reports. I can take a look at the quarterly reports. I got to start going through all kinds of information on a company that doesn't share its profits. So if and when the company goes down, when I say if and when, okay, look, way over here, the chart, okay? This is all stocks do. Way over here a year ago, she drops, pulls back, drops, goes up, comes down. goes up, comes down, goes up, comes down, goes up, comes down. So when the stock coming down, what am I collecting? If they don't have dividends, what am I collecting? Absolutely nothing. And what happens if, now it's a possibility, what happens if she goes from here and drops all the way down, past 80, maybe to 70, maybe to 50? What if they lose 50% of their value? Well, once you buy a stock, right, that pays a dividend. So let's say hypothetically I buy it here at 80 bucks, right, and they're paying $1 dividend. Well, what am I getting? I'm getting $1 dividend. What happens if the stock goes up? What am I collecting? Well, I'm still getting the $1 dividend. What happens if it comes back down again? Well, I'm still collecting the $1 dividend. As long as the company's paying a consistent dividend, why do I care where the stock price is unless I'm planning on selling it? Which is kind of like what I'm doing. I like to buy a stock as it's coming down. See, when it comes up, it goes back down again. It goes up, it comes back down again. That's all they do. So I'm just timing the market. I'm watching when it comes down. Look at it right here. It actually went up and it came back down again. Great time to jump in. But what happens if it keeps going down? They're not paying dividends. It's not on my list. It's a big fat no. Sorry. CROX is a no. Disney we looked at last night. You've only been trading since January? No. Ghost House, what I'm saying is I've only been trading live on TikTok since January. Okay? Let me show you something really quick, just, to satisfy your need for information, so to speak. All right, so we come over here to the 10-minute trader. All these little dots here are my social media. Let's take a look at the YouTube channel. Okay, now YouTube, I've been on YouTube for quite a while. Okay, we want to take a look at all the videos. We want to take a look at the oldest videos. Now, I haven't showed this one in a while.
Hi, I'm Tracy, and as you being part of my internet website club thingy, which my dad didn't let me call it that, but I did.
That's the little princess who I taught. This is who I created this trading strategy for.
Lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
That means every single day you can buy a different stock. Every single day there's a different company paying out dividends. Come on, you gotta admit it. That was funny. It was. Well, you gotta realize that was like 13 years ago. How do you keep a 9 or 10-year-old entertained? Well, you had to make it fun. But you want to hear something really crazy? You see this shirt that I'm wearing right here? It says freedom on it. I actually shot a video a couple of weeks ago with that exact same shirt. Okay, granted, this here, it was new. Nowadays it has a bunch of holes in it from all the wear and tear. It's like 15, 16 years old now, and I still got it. Weird. But anyway, yeah, this video, I did this one 13 years ago. You see there's a whiteboard in the back. When we first started doing this, we had to do all the calculations on a whiteboard. Kind of fun that was. But just to let you know, no, I've been doing this for over 20 years. This current strategy I'm teaching you now was created for my 9-year-old daughter when she was 9, back in 2008. It had to be simple, it had to be safe, it had to be predictable, it had to be consistent, and most importantly, no way that she could lose. So, how do we do that? Well, hold on. I'm shooting video still. Okay, waiting for that video to move to the next phase. There we go. And let's start another one. As I was saying, the 5 criteria are in creating a trading strategy for a 9-year-old. It has to be simple. Okay? It has to be safe, predictable, consistent, and no way she could lose. Those are the 5 criteria I had to figure out. So for that, I had to come up with 5 simple rules. Very simple. Never buy something you do not want to hold long term. Never sell at a loss. Make sure the company has increased dividends, consistent increased dividends. Me, personally, I like 20 years of increased dividends. 4, make sure it has weekly options. I want a cash flow system where I have a check every single week. I can't get that with companies that don't have options. Specifically, weekly options. Rule number 5, make sure the numbers work. What do I mean by that? Well, we got Intel pulled up right here, INTC. Take a look. Now, certain numbers, when I say make sure the numbers work, certain numbers you got to take into consideration before you buy anything. Just my humble opinion, before you buy anything. Rule number 1, well, what am I paying for it? So, and we're up top when we look at the information on the stock, because remember, this is 2 separate entities. A covered call is one of the safest trading strategies there is. That's where you buy a stock and you sell it to someone with a covered call option, okay? Covered call. Then that will give you a rate of return, because whoever buys that option, whoever buys that option has the right to buy the stock anytime between the time I sell it until the time it expires. So as you can see here, this is the option chain down here. Over here, you'll see the little dates. 2 August, that's this coming Friday. 9 August, that's next Friday. 16 August, that's 3 Fridays away. 23 August, 4 Fridays away. 30 August, that's 5 Fridays away. There's actually 5 Fridays in this month. Imagine that, 5 weeks. So, first thing I want to see is, what am I paying for it? Right now, it's $31.38. Well, just to let you know, all these numbers here are going to change first thing in the morning as soon as the market opens. When the market opens, these numbers they keep changing. Every 2 or 3 seconds, these numbers are changing. But the math that I'm about to show you and the process I'm about to show you never changes. It's always the same. So, the last traded price, the bid, the ask, the high, the low, the volume, all that kind of nice neat stuff. That's the top line way up here. The top line. So, buying it, $31.38, great. That's what I can buy it for. So what am I going to sell it for? Because I'm looking for a profit. I'm looking to get in on Monday and out on Friday. Okay, the covered call comes in right here. I'm going to sell somebody the right, not the obligation, the right to buy it from me at a certain time when I sell the option until the time the option expires. And weekly options expire every week. Okay? They actually expire on Saturday, but there's nothing you can do on a Saturday. So as of 4 o'clock Friday afternoon, you're done and over with. You're either in the money, you're at the money, you're out of the money. You're either making money or you're not making money. One or the other. I jump in on a Monday morning. I like to be out on a Friday. Does it always work the way? No, it does not. That's why my morning trading group, I do have a live morning trading group if any of you guys are interested. We jump in at 9 o'clock every morning, okay, 9 a.m. The market opens at 9:30 because we want to take a look at what stocks are up for consideration this coming week. Well, great, we got a bunch to take a look at. Now, we take a look at them. We look at the high, the low. We take a look at the option prices, what are those going for? And then we take a look at the charts. The charts are very important. We're going to get to that in a minute or two, but let me tell you about the numbers first. Remember I told you, rule number 5 is make sure the numbers work. So, am I buying it for $31.38? The closest strike price, which is a predetermined price, which I plan on selling it to on Friday. So Monday, I'm opening it up. I'm buying as soon as the market opens on Monday. Great. I'm selling it for whatever price I think is going to be safe and predictable by Friday. Well, great. I like doing it at the money. What do I mean by at the money? Well, right now it's at $31.38. The closest strike price would be the 31 or the 31.50. So you do the calculations on the 31, do the calculations on the 31.50, and then you decide which one is best. Me personally, I would go with the 31. Why? Well, because the stock's already at 31.35. What does that mean? That means the stock doesn't have to move at all. If it stays exactly where it is, I'm still going to be making money. If the stock even comes down a little bit, I'm still making my money. Okay, but let's see how the math works. All right, so if I'm buying it at 31.38, see the number up there? The highlight number right there? Okay, 31.38. Get out my trusty calculator. The 31s are going for $1.50. Okay, so I can sell somebody the right. Now, if I'm buying it at 30, 31, 38, I'm selling somebody the right, not the obligation, the right to buy it from me at 31 between Monday morning and Friday afternoon. So if the stock shoots up 35, 37, 40, 50, 70, 80, whatever, that person has the right to buy it from me at 31. What do I get? Well, I get the premium. That's the privilege of that person. That's like, I'm buying it, I'm going to hold it for you until Friday. You let me know what you want to do. For that privilege, that person is going to pay a premium of $1.50 per share. So 100 shares, that's 150 bucks. 1,000 shares, that's 1,500 bucks. 10,000 shares, that's 15,000. Yeah, 15,000. So it all depends on where you are. When I say 1%, I mean just 1%. Okay, so if you have, let's say you have 20,000, 1% is only like 20 bucks, but 1% every single week is 10,000 for the end of the year on a $20,000 account. $50,000 account, 1% per week comes to $25,000 a year. So whatever it is, I mean, it takes me 10 to 15 minutes. 10 to 15 minutes on a 5-day time frame, that's about an hour. An hour of my time equals to 1% of my portfolio. Now, the current portfolio that I share with you guys is right here. $117,000. Okay, that's where I started off at the beginning of the year. See the numbers right there? $117,000. I deposited another $21,000, so now it's up to $142,000. So it's $142,000. What's 1% of $142,000? That's $1,400 a week. Now, 15 to 20 minutes, that's $1,400 an hour. Okay? But if your account is smaller, your return is going to be small, but it's still going to be 1%. Okay? 1% per week is 50% per year. Okay, so account balance number 1 is like 142. Account balance number 2 is like 167. Blah, whatever. Is what it is. All right, so that being said, let's continue on with the numbers. If I'm buying it at 138.30, the 31 is going for $1.50. Let's do the math on the $1.50. Okay, so we get $1.50. Okay, now if I'm buying it at 31.38 and I'm selling it for 31, well, I'm losing 38 cents right off the top. You are correct. I am. I'm losing 38 cents. So my profit's 150. I'm going to reduce that by the 38 cents, and it means I'm walking away at 112 as long as the stock stays above 31 by Friday. Now, we haven't gotten into the chart yet. We're just looking at the numbers. We're going to look at the chart in a second, and you can tell me what you think the stock is going to do in the next couple of days, because that's all I'm interested in. I'm interested, what did it do this year? What did it do the last 3 months? What did it do for the last 30 days? And with that information, what do I think it's going to do for the next 5 days? It's really not that difficult. We're going to jump into that in a couple of seconds, but let's go through these numbers. So at 138, sell the 31s for $1.50. I lose 38 cents, blah, blah, blah. So I'm walking away with $1.12 per share. So 100 shares, great. 200 shares, great. 500 shares, whatever. It's per share. So now I'm going to divide this profit by the amount that I'm paying. Now I'm going to divide it by 31. Why 31 and not 31.38? Well, because I already subtracted the 38 cents out of the equation. There's no sense in subtracting it twice. So this is going to give me a grand total of 3.6. I'm going to write. I'm going to pause for a second and write this one down. Put this to drafts. Sorry, shooting a video still. Okay, so I'm actually going to write Intel down. I don't think I have Intel. Do I have Intel written down? Yes, I do. As a matter of fact, I do. Written down and circled, by the way. All right, so that's a good thing. We had it written down and circled for tomorrow. Imagine that. It's for tomorrow. All right. That being said, 3.6. I like that. So now that we know that the numbers work, now that is for the 31. Let's take a look at the 3150 because they're different. Here's the thing, with the 31, the stock doesn't have to move at all. It can stay exactly where it is. It can even come down a little bit, and I'm still making the 3.6% for the week. All right, now, at the 3150, well, the stock does have to move up. I'm still getting the return. Let's find out what that return is going to be. The 3150 is going for 125. 125. And I'm going to divide that by the full purchase price because the strike price is higher than the purchase price, which means if I do hit the strike price, the 3150 by Friday, not only will I get to keep that 125, whatever return that is, 31, 38, that's 3.98, that's almost 4%. Not only do I get to keep that 4%, but I also get the difference between the 3138 and the 3150, which is an additional 12 cents per share. Okay? So the numbers look great for the 3150 at 3.98%. But the stock has to move. And if it doesn't move, well, you get to keep that 3.98% and you get to take the stock into next week. And then you get to do it all over again. Personally, I don't like doing that. I like to get in on a Monday and be out on a Friday, which at the 31, the odds and probabilities are higher. The rate of return is less, it's like 3.6%. Oh, getting 3.6% rather than 3.9. You got your good and your bad. Okay, I'm buying it. I have to hold it. The stock is either going to go up or it's not going to go up one way or the other. I would prefer, me personally, odds and probabilities being in my favor, which means I personally would go with the 31 or the 30/50s. Then I do the exact same math for the 30/50 or the 30 and find out what that is. All right, I missed a bunch of questions. Let me move back up here. All right. Hey, what kind of questions do we have? Coffee Break Logistics. How you doing? They don't have a dividend. Intel doesn't have a dividend? Really? Hold on a second. INTC. Yeah, they do. Ooh, and they cut the dividend. Now, they've been going up for quite a while. Look, all the way back 97, all the way back to the 90s. All right, all the way back to the 90s, slowly going up. Yep, continuing going up. And then in 2023, they cut the dividend from 37 to 13. Now, am I going to cut them out altogether? Not really, because they've been around for a long time. They get name recognition. They've been increasing their dividends consistently, but recently they just pulled back a little bit because of the State of the Union, more than likely. But I'm not going to write them off. They do have a dividend, John. Sorry. You want to take a look at VLD. What the hell is VLD? Seriously, VLD. Yeah, it's $3 stock. You can't possibly tell me a $3 stock has increased its dividends for 20 consecutive years. And what are you going to do about this? That's a monthly. That's a big fat no. Sorry, VLD's a no. Sorry, Mahoney. How about Snap? I never even heard of Snap. Was that Snapple? Snap Inc. 1333. SNAP. No dividends. Sorry, dude. Snap's going to be a no. The only reason why I don't like it, it's harder to track. Why not sell calls against it as well? Wayne, it's a perfectly valid answer. I mean, a perfectly valid question. Okay, why not sell calls against a company that doesn't have any dividends? Nothing wrong with it at all. No reason whatsoever You can't or you shouldn't do it. However, I'm not going to do it. Okay, there's 300 companies, 300 companies that consistently increase their dividends and have weekly options. You take all 300 of those companies and you put it into a quarter. What do I mean by a quarter? January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Okay, so I get 300 stocks that I'm looking at and I put it into one quarter. That's 13 weeks, 66 trading days. 300 companies within a 66 trading day time frame. That's anywhere between 3 and 20 different companies I got to look at on a weekly basis. Well, now, I don't look at everything. Okay, when I look at companies, this is all I look at. Okay? I look at what is up for consideration for the week, and that's it. This is just one of my lists, and this list is, I consider it as my 100-year-old company list, because most of these companies are 100 years old. Okay, you got Clorox, PPG, British Petroleum, Emerson, Visa, Wells Fargo, Citigroup, U.S. Steel. All those companies are over 100 years old. Okay, so when I'm looking, like tomorrow's Monday, I'm going to be buying 5 or 6 stocks. I have 3 different accounts that I'm actually sharing with you guys. I usually only share 2, but now I'm up to 3. But here's the thing. I forget where I was going with that. Don't get old. It's no fun. Okay? I should have cue cards, but I don't. All right, anyway. So, as I'm saying, each one of these green dots on this calendar behind me represents a good company that I like, that I have checked all the numbers personally, and I'm okay with any one of them. Okay, if it's on my list, it's going to pop up. So this is my personal list, and look at what happens when I get rid of my list and I just put whatever. Okay, those are all the companies that are paying dividends in those days. And the ones that look like there's nothing there, look at the third, 33 companies. The fourth, 50 companies. The ninth, 35 companies. The 10th, 67. The 11th, 48 companies. The 14th, 71. The 16th, 49. The 17th, 53. 37. Look at this one right here. 134 companies, each paying a dividend on this date. So how do you pick which one? Now, the reason why I like dividend stocks, Wayne, and the reason why those are the only ones I trade, it's not an if. Okay, you got to hear me on this one. It's not an if, it's a when. Okay, take a look at the chart behind me. Okay, she came down, she went up. She came down, she went up. Look at from here at 17, came all the way down to 10. Okay, what do you collect when the stock drops if it doesn't pay a dividend? You collect nothing. And what happens if and when? Now remember in 2021, when we had the pandemic, a lot of companies lost between 50 to 80% of their valuation. 50 to 80% of the valuation they just lost just because of some weird thing that popped up out of nowhere. And it did pop out of nowhere. Nobody knew it was coming. But when those stocks dropped, they lost all that valuation and price, the people who got dividends continued to get higher and higher dividends. So you have companies that are over 100 years old that consistently and continuously, to this day, continuously increase their dividends. They're the only ones I look at because I know they are profitable. So sorry, Wayne, if it doesn't have a dividend, I have no desire to take a look at it. But that's just me. You can do whatever you want. So the dividends, stock price does not affect it. No, not really. Okay, the dividends are directly related to the profits the companies are making. So if the company's profitable, the dividends go up. So I find it to be one of the simplest and easiest ways to find out whether a company is worth investing in. Okay? So I honestly don't care how much of an increase. I care about the consistency of the increase. Because if the company is not profitable, it's not going to increase its dividend. If it is profitable, they are going to increase the dividend. It's actually that simple. If the company's profitable, they're going to pay a dividend. And if they're continuously profitable, they will continuously increase the dividend. So what does that come down to? That comes down to a couple of lists. If you've got a pencil and piece of paper, you might want to write this down. You ready? First list you want to take a look at, Dividend Kings. Okay, that is 54 companies that have increased their dividends to their shareholders for a minimum of 5 decades. That's 50 years. There's only 54 companies that actually have done that and continuously do that. 3M was on that list. They got booted because something happened at the beginning of the year. They had to cut a big fat check, pay some kind of lawsuit or whatever the reason was, and their stock dropped. They got kicked off of the Dividend Kings list. Bummer, it happens. Long hair looks good, man. Alrighty, thank you, I guess. 60 years old. My dad said my hair would start disappearing at 35. What is your thoughts on Google? Does Google pay dividends? Let me just go right here real quick, because it's not on my list. GOGL. Let's take a gander at it. Oh, look at this. They do have dividends. Nifty. Okay, before we go there, change that, change this. GOGL. Oh, that's going to be a no. It's a monthly. Even though they've had dividends and they consistently increase it, I don't know if they consistently do it every single year, but I did notice they do have dividends. But they only have monthly options. Monthly options, I can only do that 12 times a year. 12 times a year, just not enough money for me. I like to get weekly, consistent cash flow. 86. Good evening. Bob Mollica. Hey James, let's find some winners tonight. Alrighty, let's see what we can come up with. Haley, what kind of software are you using? Alright, Haley, this is not software. This is a trading platform. Okay, you can go here and you can buy, sell, trade anything you want. Okay, you can do stocks, you can do commodities, you can do, I don't know if you, can you do Forex on this thing? Yes, you can. You can do Forex on this thing. Okay, you can do Forex, futures. Okay, I can do futures. Can I do crypto? Pairs trading. Ooh, nice. Yeah, but I don't do any of that stuff. Sorry, I do dividend stocks only. That's it. Okay, I only want to spend 15, 20 minutes in front of my computer. There's a reason why it's called the 10-minute trader for a reason. It takes me less than 10 minutes. And as a matter of fact, tonight I'm actually going to go through a couple of trades so you see how quick and easy it can be. So yeah, it's not software that is actually Think or Swim. You can download that for free from online. But if you want to be able to trade on Think or Swim, you got to open up an account at Charles Schwab. J-Rock. J-Rocker, where is he going to look? Where is he going to look at the dividends? Where? Okay. Where I look at the dividends is right here on the Market Watch. You come up to the Market Watch, you come down to the calendar. On the calendar, see each one of these little dates, little green dots? Each one of those little green dots represents a company that is going to pay out a dividend. So let's click on this one right here. Okay, so what do we have? All right, roll this up. We have ADM, AG, AGO, AMRK, no, ARMK, BHB, CAKE, COP, ED, EGLE, FDP, FSK, GNK. I can go down the whole list, but this is just one day of companies paying out a dividend. Okay, the dividend amount is here, the announcement date, the EX date, the date of record, and the payment date is all right here. Okay? Now, I don't look at all of this for the specific reason that not all of these companies fit my parameters. What is my parameters? My parameters are very simple. Okay? My parameters are easy. 20 years of increased dividends, weekly options. Now, as I said earlier today, there's 9,598 different companies I can invest in on any single day. However, I only look at 300. But I take those 300, throw them into the calendar. Every week I'll look at 3 to 20. That's about it. 3 to 20 companies. That's it. I won't look at any more. Okay? I won't look at Hewlett Packard when it's not time for Hewlett Packard to pay the dividend. When it's ready for them to pay their dividend, fine. I'll take a look at it. I'll take a look at the numbers. HPQ. All right, I'll take a look at the numbers for Hewlett Packard. 3671. The 3650s are going for 43. That's over 1%. The 37s are going for 23. Not quite 1%, but okay. First thing I want to look at is the numbers. What am I buying it for? Right? What am I selling it for? What am I collecting? What's the math telling me? If I'm buying it for this price, I'm selling it for that price, what am I walking away with? Great. So that works. Next, I want to take a look at the chart itself. And there's 5 simple things I want to see on every single chart I look at. Okay? First thing, high, low, where was it, where is it, and which direction is it going? So the very first chart I'm looking at is the 1-year chart. All right? Very easy to see. High, 39.61 back at the end of May. The low, 25.16. That was the end of September of last year. Where was it a year ago? 33.04. Where is it right now? 36.34. In which direction is it going? Well, it looks as if it's going to the upside. Okay, so that gives me an idea of where the stock is as compared to the 1-year chart. That's all it's telling me. Where's the high, where's the low, which direction it's going for the 1-year time frame. How are you doing tonight? I'm doing lovely, Al. The last 30 days. 30 days ago, we want to go all the way back towards the end of April. Okay, 428. That's the last 3 months. Well, what are you seeing? Well, first thing I'm seeing is the 90 days. This is the last 3 months, 90 days. 39.62 is the high. The bottom was 27.57. Okay, 90 days ago, 28.31, and more recently, Friday was 36.34. All right, great. Okay, is there a pattern here? Well, she's going to the upside, channeling sideways. No, not really a pattern. Okay, so we're looking at the 28th of June to present. Okay, this is the last 30 days. Again, the high, the low, where was it, where is it, what direction is it going? Well, it's pretty self-evident at this moment in time. 30 days ago, we opened up at 34.90. You see it right over here? 34.90. All right, you can't see me. All right, 34.90, way down over here. She shoots up. Here's your 30-day high right there. A 30-day high on the 17th. That was 38.42. A little bit of pullback, a little bit of retracement, a little bit of pullback. I have no idea what's going on Friday. It should be, hypothetically speaking, going towards the downside. But usually when it's not going where it should be going, I like to stay away from it. Even though Hewlett Packard is a good company, it is on my list. Okay? Where is he looking? Okay, David, we already did that one, J-Rock. Hey, Michael Chunko, how's it going? All right. Marvel, 86. We're going to take a look at Marvel. We looked at it yesterday and it looked pretty good. Okay, we're going to look at it again. Hold still. So Hewlett Packard, even though the numbers are okay, the chart is a little questionable. Okay, so I would write it down and I put a question mark next to it. I would like to see where it opens up tomorrow. If she opens up higher, there's a possibility that the 36.19 from Thursday could be the bottom if the 36.19 is actually the new bottom. Could be. We just don't know. And when we don't know, well, we just put a question mark next to it and we move on. All right, so next on the list, we already looked at Hewlett Packard. Marvel, MRVL. Now, Marvel is another one. We cut it a little bit of slack. Look at the chart. Interesting. High, low, what is, blah, blah, blah. 65.95. So the closest strike price to 65.95 is going to be the 66, right? 66 right there, $1.61. Well, that's over 2%. But here's the thing. Remember rule number one, never buy something you don't want to hold long term. Number two, never sell at a loss. So let's take a gander at Marvel. Now Marvel, a year ago, 64.98, bottomed out 46.21, topped out at 85.84. Look at the last 90 days. Oops, last 90 days would be right about there. Okay, so this is the last 90 days. Simple. It goes up, pulls back, goes up, pulls back, goes up, pulls back. Well, Thursday, Hakuna is here from Sweden. How's it going there, Hakuna? So we're looking at Marvel. And Marvel, as you can see it right here, has a new bottom right there, 61.98. Okay, that was on Thursday. Friday was an up day. Cool. I like 2 days to the upside before I jump in on anything. Now, Marvel is on the list for me to take a look at tomorrow morning. But before we do that, let's take a look at the last 30 days, and that will be the 628, 628 right there. 628, here we go. 30 days ago. This is just 30 days ago. Okay, look at the chart. 30 days ago, she goes up, there's the high, pulls back, the 30-day bottom is right here, comes down almost to 62. And why am I not seeing this whole thing? Whoops, right there, yep. I'm gonna have to push this table back a little bit so I can get the whole chart in there because I can't see the whole thing. All right, so you get your 30-day high back on the 9th of July. The 30-day bottom was on the 25th. Thursday was an up, Thursday was the bottom, Friday was an up day. I like 2 days to the upside. So let's look at chart number 4. Remember, 1-year chart, 90-day chart, 30-day chart, and seasonality chart. What do you think about Prairie? Never heard of them. Could be a great investment, but I don't know for covered calls. All right, Hakuna, you've been here long enough to know I honestly really don't care about good investments. I don't. I don't want to buy something and wait for it to go up. I'm at that age where I need a consistent, predictable, steady weekly cash flow. Sorry, that's where I am. I have a little bit of money set aside, okay? That gives me 1% per week. That takes care of my bills. It is what it is. So let's keep on moving. Marvel, all right, interesting. Let's take a look at seasonality. What does it normally do this time of year? Now, seasonality, okay, chart number 4, 5. Is that chart number 5? I think, I don't know. All the way to the left, January 1st, all the way to the right, December 31st. The blue line represents the movement for this year, okay? The red line represents the average movement throughout the year based on 10 years of historical movement. Well, what has it done over the last 10 years, this time frame, the beginning of August? Here we go. Put our chart right there. Basically, for the next couple of weeks, look, here's where we are right now. The 27th, all the way to the 5th, to the 2nd, which is this week. Okay, this is Friday, from here to Friday, and then for the next Friday, for the next 2 weeks, she's basically just going to go flat. No big up moves, no big down moves. Okay, fine. I like Marvel. All right. Let's get some more questions out of the way. So I like Marvel. Simone, how are you doing today? Nicholas. Do you buy the position on Monday and sell the call and Friday get the whole POS? Well, I'm old school. POS means piece of shit to me. I have no idea what POS means to you in this particular situation. So if I'm buying first thing Monday morning, I'm selling the covered call first thing Monday morning. I get the premium, whatever that's going to be, okay? This number right here, I'm collecting that very first thing Monday morning. That goes directly into my account. I can spend that money right away. However, Friday will really depict on what we do next. Because when I buy it on a Monday, hypothetically speaking, Marvel's at 67.72, 65.72. Great, I'll buy it. I'll sell the 66s. Okay, the 66s going for $1.61. I might take a look at the 65s. I'm not sure. Well, I mean, actually, the 65s would still make over 1%. It's a safer bet. Okay, because it's a huge. I know it's an oil company. Sorry, Hakuna, if I never heard of them before, if they don't fit the parameters, they just don't fit the parameters. Okay, Neil, you're saying 65. So let's take a look at the 65. Okay, so if I'm buying it at the current market price, OXY, Occidental Petroleum, we'll take a look at it, OXY. The 65.95 is the purchase price. If I sell the 65s, I'm collecting 214. Okay, so 214. I'm losing 95 cents right off the top. Losing the 95 cents. I'm walking away with 119. Well, 119 on a $66 stock divided by the purchase price, 65.95, comes to a grand total of 1.8%. Well, I like 1.8%. That's one strike in. Okay, so one strike in is giving me 1.8. At the money is giving me a little over 2. This is where you have to decide which is right for you. Rule number 1, do I like Marvel? Do I see myself owning Marvel? Manny, cool beans. Thanks for that, Manny. Does that work for me? Do I like Marvel? That's the question you need to ask for yourself. Prairie Operating Company is an oil company located in Colorado. Ticker is PROP. P-R-O-P. Has no options at all. Sorry, Kuna's going to be big fat no. All right. Neil wants to take a look at OXY. OXY. Occidental Petroleum. That's actually on Warren Buffett's list. Okay, so if, Hakuna, it's an oil company, well, fine. I have nothing against oil companies. I look at Chevron, ExxonMobil, British Petroleum, Occidental Petroleum. If it's on the list and the numbers work, great. If it's not, it's not. Sorry, prop is not on the list. It doesn't make the numbers. Oil's going down. Well, okay. So let's take a gander at Occidental Petroleum. $60.55. The 61's going for 51 cents. Not quite there. The 60's going for $1. Wow. But I'm losing 55 cents right off the top, which means, yeah, I'm not getting the 1% off of Occidental Petroleum. But you got to like it, though. Choose your heart. Why don't you explain your move? We can't see the numbers. All right, choose your heart. There's a reason why I say this behind me, this chart behind me is live on YouTube. So if you're watching on your phone or your iPad or whatever mobile device, yeah, you're not going to see these numbers. Okay? There's a reason why this is live on YouTube. Okay? Sit in front of your big screen TV. Are you buying or selling calls? Okay, I'm buying a stock and selling a covered call against that stock. you're looking at the ask price on a Sunday night. MHC 3434. I'm going to say yes because it's Sunday night and the prices are what they are at this moment in time, and I've already explained. Hey James Day, how you doing? I've already explained that all these numbers are going to change first thing Monday morning, but the math is not going to change. Inspire me. What are your thoughts on Starbucks this coming Monday? Okay, so you are buying 100. Now I usually buy in between 500 and 1,000 personally, but I usually do 100 to make it easy for you guys. Mike, we're gonna take a look at American Advanced Auto Parts in a little bit. Oh, that was a good one. Wow, gotta love it. Nabisco, ox and weights. All right, so we're going to finish up with Occidental Petroleum before we look at anything else. Okay, so sit tight, everyone. Occidental Petroleum, yeah, the numbers aren't quite working, but if you really like the company, it give you a little bit less than 1%. How many shares do you need to buy to possibly get that 1% at the end of the week? Ooh, Arrow, you're going to like this. Now, you've been here before, so I'm kind of curious why you're asking that question, but I am going to address that question, so hold tight for a second. Neil, you want 1? I have no idea what 1 means. Okay, so Occidental Petroleum. A year ago, we're at 61.71, bottomed out at 55.09, topped out at 71.22 in April. Okay, she's been falling. The new 90-day bottom is 58.82. Okay, the last 30 days. Okay, so here's the last 30 days. Now this is pretty plain to see. Yeah, 1% per week. 30 days ago, we're sitting at 63.19. Okay, drops down to 60.45 on the 9th of July. Turns around, gets a 30-day high, 64.77 for 3 months. Okay, Neil, I'm not quite following you. Let me just see exactly what you're saying. Neil, 1 share per week for 3 months. I have no idea what that means, Neil. Sorry. I tried to follow it. So our 30-day high was on the 18th, dropped 4 days in a row, have our new 30-day bottom on the 25th. That was Thursday. Friday's an up day. So if you like Occidental Petroleum, Monday just might be a good time to buy it. OXY. So we'll put Oxy on for next week. It's not quite giving us 1%, but it is what it is. Michael, you want to take a look at Advanced Auto Parts. Advanced Auto Parts, 60.99. Oh, so I forget, someone was talking about why am I looking at the bid, high, low, close on a Sunday? Well, because today's Sunday, okay? This is what the numbers are at this moment in time. This is where you're going to find them at 9 o'clock, 9:30 tomorrow morning. All these numbers are going to start spinning like a roulette wheel, and they're constantly going to change, but the math is going to stay the same, and the process will stay the same. What am I going to buy it for? It's the ask price. Okay, at this moment in time, the ask price is $60.99. Okay, great. So what is the closest strike price? 61. The 61 is going for a $1.49. Now, a $1.49 is more than 1%. So somebody asked me, how many shares do you have to buy in order to get 1%? Well, in order to do any covered call, you have to have a minimum of 100 shares. I can't find the live on YouTube. Olive Deuce. All right. Olive Deuce. Hold on a second. If you come up to my bio in the top left corner, right up over here, click on my pretty little face right there in the top left corner. That will take you to my website, which is the 10-Minute Trader. Okay, whoops. This is what the 10-Minute Trader looks like. All right, fine. Slide all the way down, to view all the information. So you hit view all. 6 100 big, 60, 100 big bets. I have no idea what that means. Okay? YouTube channel. Click on YouTube channel. It comes down to the 10-minute trader on YouTube. Okay, live at this moment in time. There are 2 lives. This one here, okay, which is just the screen, okay, just the screen alone. And then this one here is me standing in front of the screen, the exact same thing you're seeing on TikTok. Okay, so it is there. All right, so advanced auto parts. Let's take a quick gander at it, all right? I missed a bunch of questions. I missed a bunch of questions. All right, okay. Nicholas Verostovsky, he usually buys shares, sells a call Monday with the goal of having shares called away. Yep, thanks, 86. Calibri, when do you actually do buy sell tomorrow morning? Right at the opening? Yes. Okay, now we jump on. Now the morning trading group, if you guys have a desire to do that, the morning trading group is on at 9 a.m. Now, I go through the whole list of companies that I'm looking at personally. Okay, when I say that, I got this list here of companies that are over 100 years old. I want to take a look at those. I also want to take a look at the Dividend Kings. Okay, 50 years of consecutive increased dividends. The Dividend Aristocrats. Okay, all these little dots are the ones that I already pre-checked. Okay, Dividend Aristocrats. The Dividend Contenders. Wow, that's a lot of those. So on and so forth. I have plenty of stocks to choose from on a daily basis. So don't worry about me. But I only look at the exact same stocks over and over and over again. All right. So Calibri, as I was saying, we jump on at 9 a.m. Okay, so we can take a look at the different stocks. And then at 9:30, we all kind of take a deep breath and see what it opens up at. Okay, so a certain stock, if we're waiting for an update, great. We're sitting there, we're watching it. If it's an update, great. We jump in, we buy it, we take advantage of the situation. Wait and see what happens on Friday. Okay, Nicholas Vera, call away by Friday. Yep, 1%, blah, blah, blah. Dump. All right. Crown Art Customs. Jack, question mark, I have no idea what it means. Can you explain your move? We can't see the numbers. All right, choose your heart. I already told you that. There's a reason why this screen is live on YouTube. Okay? Go sit in your living room, your big screen, in front of your big screen TV, and you can actually see those small numbers. You can't see it on an iPad or a phone. Are you buying or selling calls? I'm buying stocks, selling calls, call options, and that's called a covered call. There's lots and lots of videos on what is a covered call or how to make money with covered calls on YouTube. You're looking at the ask price on the Sunday night, right? Yep, MHC, we already went over that one. On Monday, they'll all change. What are your thoughts on Starbuckies? Ooh, we're going to take a look at Starbuckies. All right, we're going to take a look at Advanced Auto Parts, and then we'll take a look at Starbucks. All righty? Advanced Auto Parts, then Starbucks. I do have Starbucks. I don't have Advanced Auto Parts. So let's just keep on moving along. Okay, so as I was saying, Advanced Auto Parts, $60.99. Now, remember, I'm not trying to mislead you. These numbers are as of Friday afternoon. So as the market closed on Friday, these are the numbers that were there. On Monday morning at 9:30, these numbers are all going to change. But the math and the equation is still going to say the exact same. What am I buying it for is the ask. Okay, the very first number you're going to see is the last. That's the last traded price. Well, Monday morning, as soon as it opens up, it will say opening, the opening price. That will be the first one you'll see. Then it'll say the bid, what I can sell it for. Then will come the ask, what I can buy it for. Okay? Then there will be the volume, the high, the low, the open, close, blah, 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 all that kind of nasty stuff. So at this moment in time, these are the numbers we're working with. And these numbers are only for an example only. Okay, this is not a recommendation. I'm not telling you to buy anything. What I'm telling you is what I do. This is what I do in order for me to find what I'm looking for. So I like Advanced Auto Parts. I like Advanced Auto Parts. They are on my list. What I want to look at is, what am I paying for? Okay, $60.99. The closest one's going to be 61. It's $1.49. What's $1.49 on a $61 stock? Clear that. $1.49 divided by the purchase price, 61 bucks, comes to 2.4%. Well, I like the idea of collecting 2.4%, as long as the stock doesn't have to do anything. All right, so that's that. Next thing I want to see is the charts. I want to see how the stock is moving, and can I predict where it's going to be by Friday? Well, let's check it out. First thing we want to see, 5 things. Sorry, I got to work on these videos. Okay. Always, always, always looking for 5 things on any chart. Number 1, the high. 2, the low. 3, where was it? Okay, if it's a 1-year chart, where was it a year ago? If it's a 30-day chart, where was it 30 days ago? Where was it? 4, where is it right now? 5, what direction is it going? Well, it looks like overall it's going in a downward direction. 5 things I want to see. Well, great. Okay, I want to look at the 90-day chart now, because the 30-day chart looked okay. Okay, here's the last 90 days. Again, exact same thing. This is 90 days. What's the high? What's the low? Where was it? Where is it? What direction is it going? Fine. Now that I see that, do I see any patterns? Well, kinda. Not huge, but look where it is. It went sideways for a couple of weeks. She dropped, came up, dropped, went up, dropped, went up, dropped, went up, dropped. So it's not distinct. Every once in a while, you'll see ones that will just jump out at you. But anyway, here's what you want to take away on this 90-day chart. Okay, 90 days ago, she was at 74.84. Okay, topped off at 75.57, and that was back in the beginning of May. Bottomed out in the 9th of July. She went up, she went down, now she's going back to the upside. How do I know that? Well, I don't really know that. That's just what it looks like. So the 90-day chart is telling you one thing. You see it? Watch what happens when you go over to the 30-day chart. Huge difference. You see that huge movement? Not huge, but it sticks out like a sore thumb. Okay, take a quick gander at it. I want to see the high, the low, where was it, where is it, what direction it's going. All right, so take a look with me, if you will. 30 days ago, we're over here at 63. She drops down, finds a bottom here. That's the 30-day bottom. Well, what happens there? Well, you have investors like me and you saying, wait a minute, that's too cheap. Let me buy some. Live visibility restricted for 10 minutes. Wow. Imagine that. I got a 10-minute restriction, a 10-minute timeout because I said something or did something. I don't know what these people are talking about. Anyway, let's take a look at the 30-day chart again. Okay, she drops. There's the 30-day bottom. She shoots up. There's the 30-day high. What usually happens after a 30-day bottom? Well, people are saying it's too cheap, so they stop buying it. They buying it, it goes up. Well, what happens up there? Well, I can tell you from my point of view. All right. If I see a stock and I jump on it and I see the 30-day bottom at 57.81, and then 2 weeks later, all right, Doc, that was TikTok. Yeah, they do that. They're the only ones that have huge restrictions, and I don't know why. It's not like I'm saying anything that I haven't said before. All right. Anyway, as I was saying, the 30-day bottom, 57.83. 30-day top, 64.92. So from 58 to about 65, that's a $7 increase. Now I know $7 doesn't sound like much to you, but $7 on a $58 stock, well, that's over 10%. Okay, I'm letting you know. If I see a stock that I own or I have an interest in and it jumps up almost 10% in a week, a couple of weeks, well, hell yeah, I'm taking profits. So profits were started taking on the 17th, dropped down to a new bottom on the 23rd, and now we have 1, 2, 3 days to the upside. You know what I'm going to do? I'm writing this one down for tomorrow. And I don't have it written down already. All right. So I like that one for tomorrow. American Airlines, not American Airlines, Advanced Auto Parts. Because I checked out everything I wanted to see except for the seasonality. Now what does this thing normally do this time of year? Normally this time of year, well, she's pretty much flat. And I'm okay with flat, especially with covered calls and spreads. I love flat. Flat means I get no surprises coming up. Now, is that guaranteed? Well, of course it's not guaranteed. That's just saying that's what it has done over the last 10 years. Is it going to continue to do that? Who knows? I just like to stack the odds and probabilities in my favor. Okay, here we go. It has a good company. They've increased their dividends consistently. They got a dividend coming up. They got a 30-day high, 30-day low. It's going in the right direction. The numbers are working. Everything is pointing in that right direction. That's the best I can possibly do. The only thing I can do after that is wait to see where she opens up. I'll probably take a look at the 60. Let's quickly take a look at the 60, see what number that looks like. So at 60, it's paying $2. So $2, but I'm subtracting 99 cents off of it. So I'm walking away with $1.01. $1.01. That's what I'm walking away with as a profit if I do the 60s as opposed to the 61s. All right, great. Purchase price. I'm just going to write 61. I'm not going to go for that 99-cent crap. 61. So I'm walking away with 1.65. All righty. So we all know that the 61 is going to pay a higher premium. Okay, percentage-wise. But the 60 is one strike in. What are the odds and probabilities of the 60 working out as opposed to the 61? Well, the 61, she's at 60.76 at the moment. See the chart? This is where she is at the moment. 61 is just a tiny bit higher. But look where the 60 is. Way down here. It's in an upward trend. So if I'm selling below the stock price, there's a higher probability that's going to be filled out, and I'll get my 1 point whatever percentage it was. So I'm liking that price better than the at the money, the 61. All right, which one did we say? Oh, we're going to look at Starbucks next, because I actually do have some Starbucks. SBUX. All right, Starbucks. Here we go. Starbucks. All right, first thing I want to see, the high and the low. Where was it? Blah, blah, blah. Kind of nice, neat stuff. 74.24 is the current price. The closest one is going to be the 74. That's going for $2.83. What are you kidding me? Do I have it written down? Hold on a second. I do have it written down. Interesting. All right, so that being said, all right, so we're now going to get way over 1%. All right, that works. So the numbers work. Now let's take a look at the chart. High, low, where was it, where is it, what direction it's going. We see all that. Lovely. Last 90 days. This is what we're looking at. Yep, 90 days ago. I bought it at 88. I did. I bought it way up here at the 88. Next day, it's way down here at 74. Okay? I had to wait a couple of days for it to get to 72 for me to do dollar cost averaging. But it's going to happen. You're going to buy something it's going to drop. You're also going to buy something and it's going to go up. Always know ahead of time what your plan is. And you really need to get the, what do you call that? The little green monster under control. And that little green monster is greed. I like safe, predictable, consistent 1% per week. Sometimes you're taking a look and say, hey, if I do the 61, I'm getting in 2.5%. If I do the 60s, I'm only getting 1.5%. That greed thing can get you sitting on a stock for a lot longer than you want to. I want to be in, I want to be out in 5 days. All right, so Starbucks, last 30 days. $30 ago, we opened up at 78.72. Our 30-day bottom was on the 16th at 71.55. Our 30-day top was 3 days later at 79.38. 4 days to the downside, 1 day to the upside. We're sitting at 74.05 at the moment. So I'd be looking at the 74s myself. Okay, the 74s are going for 263. Well, let's do the math on that one. Okay, 283. 283. Now, granted, remember, now, hold on a second, I got to change this again. I got to keep the videos rolling. Okay, now we're taking a look at what is the best strike price for Starbucks. To do that, the 74 is going for 283. Great. Well, if I buy the stock at 74.24, I'm losing 24 cents right at the top. So subtract the 24 cents. I'm walking away with 259. That's a nice freaking premium. I'm going to divide that by the purchase price, 74. Comes to a grand total of 3.5%. What does the stock have to do? The stock has to stay exactly where it is or go up a little bit. It could even come down a little bit and I'm still making the money. The main idea is to pick a good quality stock, buy and sell the right call option. By that, you got to do the math. Okay? At the money, out of the money is going to be a higher rate of return. Also, less risk, less chance of it being called out. And you want to be, I want to be called out. I'm not telling you guys what to do. If I'm buying at 74.24, okay, and the 74 is going for 283, well, great, I will do that one. It's a safer bet. I like safe bets. All right. Next. All right, next, here we go. So how many shares do you need to buy to possibly get that 1% at the end of the week? Or Arrow, I think I just showed you that one. Okay, so let's do a quick trade. Okay, I'll actually do one on Starbucks at the 74. All right, so I looked at the chart. I decided that, yeah, I like it at 74. So let's get rid of this. Okay, next thing I want to do is I want to change the option order that I'm creating. Right now, it's on single. See it over here? Single. I'm going to click on that. And these are all the option orders that you can actually do. That's a lot of information. And do I know how to do all of them? Nope. I know how to do most of them. Some of them I don't even bother looking at. It's a little too much time consumption for me. All right, I'm going to go directly to a covered call. Okay, I like covered calls. They're simple. They're easy. Remember, I said I liked it at 74. So the 74 strike price, right there, see it? The 74 strike price right here. I'm going to come over. What can I buy it for? Okay, I want to buy a covered call. And right now, it is at 71.41. Cool. Click on that, and the order automatically fills. Now, I have it preset for 1,000 shares. I'm going to change it to 100 so you guys don't get scared by the numbers. I'm going to change it to 100 shares. All right, so 100 shares of Starbucks. It's a double order. I am buying 100 shares of the stock, and I am selling one contract. Okay, the 74 to August 24. That's this coming Friday. Okay, here's the price right here. I like to do market order, or just leave it at limit order. Makes it easier for you guys. Then I'm going to hit confirm and send. I'm not going to hit that send button until I do my math. Let's do a little bit of math. First thing you want to do is read the order out loud, because your eyes can deceive you. I have done many mistakes because I didn't take my time doing an order. All right, so I'm buying one covered SBUX, that's Starbucks. 100s, those are the weeklies. Okay, 2 August 24. These are all right here. 2 August 24. That's this coming Friday. The $74 call strike. Okay, Starbucks at 71.26. That's the current price at the moment. To open to open. Why does it say to open to open? Well, because I'm doing 2 trades at the moment. I'm opening a stock trade and I'm opening an option trade. So it's 2 trades in one. Now, underneath that is the break-even stock price. Break-even stock price, 71.26. Well, at this moment in time, the stock's at 74.24. So as long as it's above 71.26, I'm making money. All right. Most I can make off of this particular trade is $274. Okay, so I get my trusty old calculator out. Clear that. $274 is the maximum I can make off of this trade. How much is it costing me? Well, the cost of the trade, including commissions, is $7,126. Okay, that gives me a grand total of 3.8%. Yeah, I'm doing this one tomorrow. I am. 3.8%. But I'm not doing it until the market opens because I want to make sure it opens at either at the current price or higher. Now remember, the numbers are all going to change. So it's 3.8% for an all-cash trade. Now, if it was a margin account, it would be a total different story. You want to see what a margin account looks like? I do suggest you do not do margin until you understand the risks that are associated with margin accounts. The profit is still the same. Oops. 274. But a margin account, you're actually borrowing money from your broker. So a margin account, I would be investing $3,426. Give me a total of 7.99% return for the week. And the stock's just basically got to stay exactly where it is. That's why I like covered calls at the current market price or one strike in the money. It always comes down to the numbers. The numbers don't lie. 1 share, 100 shares, 1,000 shares, all the same. So Arrow, how many shares do you need to buy in order to possibly get the 1% at the end of the week? Anywhere between 100, 500, 1,000, however money works for you. What do I think of Lennar? Ooh, Hakuna. I do like Lennar. Lennar is on my list. So let's take a look at Lennar. L-E-N. All right, Lennar is going to be a no. Not that I don't like Lennar. It's just look at where the price is at the moment. Okay, it's at a high of the year. That's one game I do not play. I do not play jump on the railroad train with everybody else. It's all going one direction to the upside. You're buying high, waiting for it to go higher. Yeah, I don't do the game. I don't. Okay, I don't buy high, waiting to go higher. Yeah, sorry. I just assume wait for a company to have a pullback. Okay, 2 days to the upside. Look, here's your pullback here. Okay, here's your 30-day bottom on the 5th of July. 2 days to the upside was the 8th and the 9th. Third day to the upside would be the 10th. If it jumped on the 10th, would have shot on up. But I still only would have made my 1% because I'm not looking for capital appreciation. I'm looking for a safe, predictable, consistent cash flow. And I'm using that. All right, you got that, Hakuna? Now, don't get me wrong. I do like Lennar, but not at this moment. Because, all right, Nabisco, you actually have to give me the ticker symbol for that one. I don't have Nabisco off the top of my head. How long do you have to hold the stocks to get the dividends? All right, user 1050. To capture a dividend, you have to own it for at least 2 days. Okay, so let me go back to the calendar. All right, if I like Aflac on the 22nd, see, Aflac on the 22nd, I have to buy it on the 21st, the 14th, the 9th, the 1st, the 4th, the 3rd, any time before the EX date. There's 4 dates to remember. 4 when it comes to dividend stocks. 1 is the announcement date, plain and simple. 2 is the EX dividend date. That's the last day the stock trades before the dividend is paid out. 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. 4 is the payment date. Is that a touch screen? The big one? No, it's not. It's just a big TV. And when I touch it, it does that. No, it's not a touch screen. All right. So if you want to capture the dividend, you got to buy it before the EX date and hold it past the date of record. All right, more questions. Calibri, when do you actually buy, sell? Tonight, morning, right at the open, usually right at the open. If you own shares 1 day before the EX date, you qualify for the dividend. Yep, 86, you're right. Oh, 100 shares per contract. I can't find the live on YouTube. All of Deuce, it is the THE, the 10 minute trader. The 10-minute trader on YouTube. Okay, and there's 2 lives on YouTube. Not just the one. All right, so we're going to look at something else. What else do we have to look at? What else? Jason, that's almost monthly. You always say you don't do monthly calls or puts. I don't do monthly calls or puts, Jason. I'm not quite sure. I'm going to have to go backwards because I missed that one he's talking about. Starbucks has earnings on the 30th, which is why the contracts are juiced. Okay, fine. I honestly don't care about the earnings. Okay, either you like the stock or you don't. WBA, Walgreens. Now, I like Walgreens. Let's take a gander at Walgreens. And as a matter of fact, I own a bunch of Walgreens. WBA. Here we go. WBA. So, it started. All right, we're going to take a look at Walgreens. A year ago, we're at the high of $30.95. And the bottom, which was the beginning of July, at $10.56. So take a look at the last 30 days for Walgreens. All right, here's the last 30 days for Walgreens. Check it out. Huge difference between looking at the last 90 days. You buy shares or options. I'm not quite sure how to pronounce that name, but I buy the stocks, the shares, and I sell the options. It's called a covered call. There's a lot of videos available on YouTube that explain how a covered call works and how to profit from covered calls. Going to bed. What time? Chicago time, 9 o'clock. All right, Barry, I do everything Eastern Standard Time because the stock market opens up at 9:30 Eastern Standard Time. It's right in New York. So I got no choice in the matter. Walgreens, last 30 days. Check it out. 30 days ago was the 30-day high. And that was $12.69. The 30-day bottom was on the 9th, July 9th. Okay, she drops, shoots back up, drops again. Now she's going to the upside. She's at 1182 at the moment. Okay, I get no problems holding it at 1182. At this moment in time, The 11.83 is the purchase price. See it up here? 11.83. Okay, the 12s are going for 18 cents. I know 18 cents doesn't sound like a lot of money, but 18 cents on a $12 stock, that is over 1.5%. I have no problem with 1.5% on Walgreens. Coffee break logistics. How about Kohl's, Macy's, and Ford for tomorrow? Arrow by Friday, right? Oh, I have no idea what's going to happen between Monday and Friday. All I know is if I'm looking at a stock and I like it, I like Walgreens. Fine, I'll do Walgreens. Why not? Alrighty. Kohl's. Let's take a gander at Kohl's. Now, I do own some Kohl's, just to let you guys know. Currently, it's at 20.79. The closest one's going to be the 21. Great, that works. The 20.50, that works also. Fine, I do the 20.50 because it's a safer bet. A year ago, we topped off at 29.75. Bottomed out the middle of October at 17.68. Okay, great. It's the last 30 days. Let's just cut to the chase. Go to the last 30 days. Here we go. Last 30 days. Awesome. Take a gander. Okay? 30 days ago, there we are. Comes down, shoots up, comes down. 30-day bottom on Wednesday. Thursday's up day. Friday's an up day. Kohl's is a big fat yes for Monday. So Kohl's is a yes for Monday. What's the seasonality tell us? What does Kohl's normally do this time of year? Well, this time of year, Kohl's has a tendency to go up a little bit. Okay? See the chart? She goes a little bit to the upside. Second week of August. All right, so that's Kohl's. Next on the list, Macy's. Ooh, I like Macy's. This boy's talking my language. Two companies I like very much. Last 30 days for Macy's. Check it out. 30 days ago, Macy's was at 18.60. She drops, shoots on up to get the 30-day high at 20.47. Okay, big gap down. Nice thing I like about gap downs, especially one right here, they have a tendency to fill. So do I have any issues buying it at 16.57? Oh, hell no. Look at what the premiums look like. 16.57 to 16.50 is going for 23. That's over 1%. Stock doesn't have to do hardly anything. Well, alrighty then. All right, that being said, that's Macy's. I like Macy's. Seasonality for Macy's. What does it normally do? Here we are right here. Well, we got that little dip coming up. Do you see it? On Thursday and Friday. Thursday and Friday, and then she goes back up again. Yeah, I don't have a problem with Macy's. I like Macy's. Next on the list we go. Here we go. Here we go. La, la, la. Okay, Macy's. Next, you want to take a look at Ford. Ford burned my butt last week. I figured I was going to get a nice premium on Ford because it showed it the night before. But in the morning, not so much. 11.20. Now, here we are at Ford. 30 days ago, we opened up at 12.26. 3 weeks later, which just so happens to be the 18th of July, was the 30-day high, 14.85. 4 days to the downside, 13.68, and then she drops from 13.68 all the way down to 11.17. So 13.68 to 11.17, that's a 20-something cents drop. May not sound like a lot, but 20 cents on a $12 stock, that's over close to 20%. That's a big drop. 20% big drop. The two lives on YouTube, is that on the same channel or two separate channels? The same channel, but two different programs. One is coming off of an iPhone camera. The other was coming off of OBS broadcaster. So I don't know if that helps you out any. So anyway, I like Ford, but at 11.20, the 11.50s are going for 9 cents. Okay. But the 11s are going for 30 cents. You take 20 off of there, you're still getting 10 cents on 11. Yeah, that's not going to work. Neither is that one. Neither one's giving us a 1%. It is what it is. Sorry. So Ford doesn't look that great. Boomba! What stock is this? Ford. AAP has missed earnings 4 quarters in a row, and dividends are down. You're absolutely correct. They are. Hell. Okay, now some stocks I do cut some slack. Some of them I don't. Now, Advanced Auto Parts is one of those companies I may or may not do. It all depends on what you think. But for the most part, you're right. Let's take a look at AAP. Over into the Yahoo Finance. So let's go how far back do we need to go? Yeah, it goes all the way back to 2006. So they've been paying dividends since 2006. They haven't increased, holy cow, 2019. So it was the same dividend from 2006 until 2009. That's 13 years of the exact same dividend. So in 2020, they jumped up to 25 cents. 21, they went to $1. 22, they're at $1.50. 23, they're back to 25 cents. Yeah, I'm going to pass on that one. I'm going to agree with you, Hal. Although the numbers look good, just doesn't look right. Khalid, UPS, huh? I like UPS. Now, we looked at UPS a while ago. UPS. Okay, last 30 days for UPS. Here we are. Interesting. 128.83. So the 128s are going for 207. 207. Subtract 115. That doesn't sound right. Yeah, that's not going to give me 1%. The 128s is not going to work, but the 129s will. Okay, the 129s will give me 1%. The 128s won't. Sorry. But when you figure it out, now remember, in the morning, okay, when the market is open, all these numbers continuously change. So you've got to keep an eye on what you're looking at. Okay, because eventually you might, hit it and it might not be the right number. All right. So that's UPS. I don't mind the UPS at the 129. Now UPS, I have it written down. Yes, I do. It is written down for tomorrow. All right, next on the list, we got 25 more questions, and we're almost at 11 o'clock. Question on Instagram. Okay, yep, I finished that question already. It is on 2 different channels for YouTube. Cool Beans, didn't thought that was possible. Yeah, well, apparently it is. All right. What are we looking at now? Starbuckies. August 24th is in 3 weeks. Okay, I'm not quite sure why he wants to know August 26th is in 3 weeks. 1, 2. Wait a second. 1, 2, 3, 4, 5. No, August 26th is in 5 weeks. Because you have this week here, okay, the week that we're currently in. This is week 31, okay? Week 32, week 33, week 34, and there's the 26th right there. That's 1, 2, 3, 4, 5 weeks away. Well, August 24th. Okay, that's 4 weeks away. Okay, we're here the 24th. Okay, 1 week, 2 week, 3 week, 4 weeks. 4 weeks away, the 24th. Sorry, Jason. That's almost a monthly. Do you always say you don't do monthly call? Okay, I have no idea what you're talking about. Oh, that's what you're talking about. Okay, when I say, okay, Jason, pay attention closely. When I say to August 24, that is this Friday. Okay, that is the 2nd of August 2024. So each one of these, 2 August 2024, that's this Friday. 9 August 2024 is next Friday. 16 August 2024 is 3 Fridays away. 23 August 24 is 4 weeks away. So I think you're taking a look at the 24 as 2024. Isn't it better to look a dividend in percentage of the share price than increased dividends in the absolute numbers? Interesting question there, Kuno. Let me see if I can clarify this in any way, shape, or form. I'm just trying to figure out the best way of doing this. Okay. I'll wait for the chart to pop up on YouTube. Okay, see if I can get this quite right. All right, so here's the chart on YouTube. Ah, damn, you guys can't really see it that good. Let's try it this way. All right, here's UPS. Okay, this is UPS. This is 1 year. All right, that's just 1 year. Now, a dividend. Hey, Brandon just showed up. How's it going, Brandon? A dividend, this one is not going to be as effective as, let's see if I can find one that's a little bit more easier to go by. Okay. All right, let's take a look at Target for a second and give you kind of an idea of why we look at the dividend increases as opposed to the percentage rates of the dividend. Right now we're looking at Target, and we're going to show you why I don't use the rate of return or the yield as opposed to the dividend increases. So let's say hypothetically, Target is at 181.86. See the number right there? 181.86. Let's take a look. Look at what the dividend is for Target. The dividend is $1.10. Hold on a second. Yeah, $1.10 here. You see it? $1.10. So, if I'm looking at the chart, right? Now, the high of the year. You see the high of the year right there? 181.86. I'm going to take my trusty old calculator. Now I'm going to take the dividend, $1.10. That's per quarter. Okay, $1.10 per quarter. So for the whole year, I got to multiply that by 4. Multiply it by 4. There you go. Earnings per share, $4.40. Great. What is the yield? The yield is the rate of return, your profit, $4.40, divided by the purchase price. So if I buy it at the high of the year, which is right there, okay, see it right there? High of the year, 181.86, right? Divided by 81.86. And that gives me a yield of 2.4%. Alrighty, great. 2.4%. Remember that number. Clear that. Then I take 4.4, the exact same amount. And this time, let's say I buy target at the low of the year. Divide that by 102.93. That's 4.2% yield. Has anything changed different between the dividend, $4.40, and the stock price? Well, yeah. The stock price, the low of the year was 102 right here. The high of the year is 181. But did the dividend change throughout the year? No, it didn't. It stayed the exact same. Because when they give their announcement and say, hey, this is how much we made this year, $4.40, that's the dividend we're going to pay, $4.40. And then they pay it once per quarter, which is $1.10 dividend every 90 days. Okay, great. But the chart is telling us at the high of the year, well, we have one interest rate, one rate of return. The low of the year, totally different number. But the dividend didn't change at all. So if you keep changing your approach by looking at the yield compared to the purchase price, the purchase price continues to change all the time. Look at this number here, okay? $1.10. Well, the stock price here was $1.64. Look here, $1.10, another dividend. Well, what was the stock price? $1.48. Another dividend right here, $1.10. Stock price was $1.07. And the fourth dividend right here, okay? $130. The dividend never changes, but the stock price does. So as the stock price changes and the dividend never changes, the yield is going to be different. Because if I'm jumping in at 102, okay, that's a certain rate of return. But if you're jumping in at 181, that's a different rate of return. But is the dividend different? No, it's not different at all. So to answer your question there, Kuna, in my humble opinion, I like looking at the increased dividends rather than the yields, because the dividend doesn't change at all, right? Here, okay, 110, 110, 110, 110. Doesn't change at all. But the yield at 102 is different than the yield at 181. Exact same dividend, but the yield changes as the stock price changes. So I like to look at the consistent increases in dividend as opposed to the percentage of the share price and the increased dividend in the absolute numbers. Hopefully that makes sense. That's almost monthly. Yeah, Jason, you were paying attention to the wrong number. Okay, Jason, August 24th is a Saturday. What stock is that? That is Target. What brokerage platform? That is Thinkorswim. Thanks. WBA, we already looked at WBA a little while ago. What else we got? 39 more questions. What do you think about UPS? All right, we already looked at UPS. Sorry, Khalid, we looked at it a little while ago. Boomba! To capture dividend, you have to own the stock on the EX dividend. Yeah, that's correct. Wildcat Sam, how you doing? What software are you using? That is Thinkorswim. It's a free downloadable trading platform from Charles Schwab. Bob, how's it going there, Mr. Bob? Just joining in with us. Way to go. UPS, Khalid, we already looked at UPS. Nikki, I missed Nikki's question. I hit the wrong button. I missed Nikki's question. Khalid, we already looked at that. All right. You're good on YouTube, thank you. All right, UPS, great job, blah, 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 blah. Marie, you said you own WBA for a while. Do you keep buying it or have you been holding it the same trade. No, Marie, I buy on a Monday. I like to be out on Friday. So Walgreens, WBA, okay, has a tendency to go up, down, all that nice, neat, fun stuff. Um, let's quickly take a look at account statements. WBA, let's go from January 1st. Okay, from January 1st. All right, I'm going back all the way to January 2nd to see how many times I've actually bought Walgreens. Okay? I don't want that one. I want this one. All right, 18 times. All right, so Marie, the green lines represent the buy, red lines represent the sell. So each green one, I bought something. Each red one, I sold something. So the very first time I bought Walgreens this year was February 2nd, 22.46. Sold the 22.50s, got 35 cents. Nice, like it. It didn't sell right away, so I carried it for a while. Finally sold it at the end of February. And then I jumped in again, bought 1,200 shares at $20.93. Nice. Okay, sold all those, and then I jumped and I bought it again March 25th, bought it again April 24th, bought it again July 8th, and bought it again July 22nd. So yeah, it's not that I held it all this time. I buy it, I sell it. I buy it, I sell it. I buy it, I sell it. It's the same stocks over and over again. As long as they're profitable, and as long as they're consistently, oh, look at this. I got Kohl's right now, 4,800 shares. Huh. Damn it, what the hell did I do? Oh, my shares got pulled away on AEO. Is that right? No, I still have it. All right, yeah, I still have AEO. All right, anyway. Sorry, I was looking at the wrong thing. Is what it is. All right. More questions. AZ, how about Tesla? How about no? Tesla doesn't have dividends. I don't do Tesla. Can you talk about Nestle? I would need to know what the ticker symbol for Nestle is, which kind of means I don't buy Nestle because it doesn't fit my parameters, but I'll take a look at it for you and give you my opinion. But for the most part, if I don't look at it, it's usually a no. Sorry, is what it is. But unknown, yeah, I need to know what the ticker symbol is for Nestle. Does anybody know what that is? Anyone? Another video. Come on. Come on, come on. Now touch me, baby. All right. All right, Instagram question. Thanks, appreciate that, but I assume the stock price changes because changes in earnings and margins. No, Hakuna, not necessarily so. So when I say, okay, let's go to a chart, take a look. Whoops. Okay, here's the chart for Target. This is the 1 year chart for Target. Here we are back in July of last year. Why did it drop? Why did it shoot up? Why did it go up? Why did it shoot up again? There's the high, comes back down here, then gaps back down, goes sideways. Why does it do that? Something's happening in the marketplace. Well, there's highs, there's lows, there's buying and there's selling, there's earnings reports, there's stuff going on in the news, there's stuff going on in the economy. Things always change. This crap here, this high and low stuff, this happens because you and I are buying it and selling it. Why did it do this big jump right here? I have no idea. All I know is I was in the tail end of this one. That was uncomfortable. But anyway, why did it continue to go up slowly like that? There are reasons to it. Is it have to do with changes in earnings and margins? Not necessarily so. It has to do with what do you call it? Consumer sentiment, I think they call it. Consumer sentiment. That means, do we like buying it? Do we like selling it? That's basically what that means. Next, Kroger. Ooh, Mark likes Kroger. Hellraiser, raising hell. Mara, yeah, Mara is on the list for tomorrow. But somebody wants to look at Kroger first. We'll take a look at Kroger first, Hellraiser, and then we'll take a look at Marathon. Now, Kroger originally wasn't on my list. I got introduced to Kroger through Warren Buffett because it's on his list. Okay, so the current price right now is $54.70. So the 55s are going for 34 cents a share. You know what that means? That means no thank you. The numbers just don't work. Why would I look at a company that's not giving me 1%? I have too many companies. Too many that are giving me 1%. I have a whole bunch that are giving me 2% for next week. Okay, so why would I look at one that's not giving me 1%? Don't get me wrong. I like Kroger. I have bought Kroger in the past. It is on my list and will continue to stay on my list. But even though everything looks good, the numbers just aren't, it's just not giving me the rate of return that I want. And if I had a choice, okay, jump into this company and it'll give me what I want, jump into this company and it won't give me what I want, but they both come to me, sorry, no. Mara, okay, let's take a look at Marathon. M-A-R-A, tra-la-la. Okay, the bid, 21.67, the ask, 21.69. Look at that. Both the bid and the ask are higher than the last trade. Now, this is just a slight clue. Or changes in growth and interest rate? Not necessarily so. Changes in growth and interest rate. Not necessarily so. It's just the buying and selling habits of the investors. That's us. It's like, do we like it? Great. If she goes up, okay, look at this big jump from here, from $8 all the way up to 32. That is a 400% increase. Well, of course it's going to be profit taking. So you have profit taking, it brings it down to just around 15. All right? Then at 15, I say, wait a minute, that's cheap. We just made a big chunk on the other day. So we buy it again. And it goes up to 34. So from 16 to 34, that's another 100% increase. Okay, well, of course there's going to be profit taking. So there is. So she drops back down to 18. Well, at 18, can we do it again? So we jump in, and she goes back up to 24. People are weird. People will chase a profit, even when there's not one there to be made. Why would you have bought Marathon at $8 back last October? Okay, no, I can't say anything about that because I didn't start looking at Marathon until January, right here. Okay, so everything that you've seen me do, now you can actually go back to YouTube and you can see my live trading from, I don't even remember when I first started broadcasting on YouTube, the full episodes. I don't know. Charts are fine on YouTube. All right, cool. So Hellraiser, that's where we are at the moment, 21.57. Okay, the 22s are going for $1.29, well over the price. 21.50s are going for $1.40, well over 1%. So let's take a look. A year ago, we're sitting at 16.37. We bottomed out at the beginning of October at 7.04. 7.04 was the bottom of the year. Top of the year is 34. That's close to 500%, but it is well over 400% increase in less than 6 months. Well, great. Well, there's going to be profit taking, and there was. All right, so that being said, last 90 days basically channeled. Look at that channel between, what was that, 19 and 22. It just channeled for what, a couple of months? Last 30 days. Here we go. Last 30 days. Well, alrighty then. Now, we looked at this already the other day, and we came up with the same conclusion. Interesting that Saturday night and Sunday night is basically the same as Friday night. You know, nothing changes between Friday night and Sunday night because the markets aren't open. Nothing's moving. It's all the exact same numbers. All right, so 30 days ago, 1975. Bottomed out on the 10th of July at 1876. A week later, we're at the top at 2739. So from, was that 19 to 27? 19 to 27, that's $8. $8 on a $19 stock. 10, 20, 22, 23%. That's a nice jump in a week. It's a 20%, over 20% increase in a week. Well, of course there's going to be profit taking. Sometimes it's so logical that it's kind of silly. All right? So 30 days ago, okay, we're at 1973. She jumped up to 23. So 19 to 23 is a $4 move. $4 of a $19 stock. $19 stock, $1.90 would be 10%. So $4 is a 20%. It's a 20% move. Well, yeah, there's going to be profit taking, and there was. And then again, from 1882 all the way up to 27. Yeah, that's another big jump. Well, of course there's going to be profit taking. Now our newest bottom right here on Thursday, 1996. Well, look what happened on Friday. Okay, I'm going to be keeping an eye on this one first thing tomorrow morning. Because if this thing opens up a little bit higher, look at what I'll be making off of it. 129 off of a $22 stock price. Okay, that's over 4%. And yeah, Merit doesn't have the dividends that we'd like to have, but it's one of those stocks that was introduced to us. I believe it was by, no, wait a minute. Paramount was introduced to us by, what's his name? Warren Buffett. M-A-R-A. Here we go. History from Marathon. Yeah, Mara has no dividends at all. So we're back at the same thing again. Okay, now we only bought Marathon because somebody introduced it to us. That's it. All right, chart to find. Do I like Mara? Yep, UPS, Nestle. Unknown, Nestle. Yeah, you already asked me about Nestle. Someone asked me about Nestle. But that's not the stock symbol for Nestle. That much I do know. D, we already looked at UPS. John, Prospect Capital. Okay, I've never heard of it, so I don't know the ticker symbol off the top of my head. Would you consider a covered call limit order on Ford? No. Sorry, Renaissance, because the, what do you call it? Give me a second, give me a second, give me a second, give me a second. Yeah, the numbers just not working this week off for Ford. Wave Runner, Halliburton. I like Halliburton. H-A-L. Halliburton. All right, 34.56. The 34.50s are going for 47. That's well over 1%. All right. A year ago, 37.89. 43.87 was the high back in mid-October. Okay, bottomed out. Well, it looks like a triple bottom? Holy cow. Nope, not a triple bottom, but it is a double bottom. Okay, 614 and 710. Cool beans, 32.66. So the last 30 days. Hold that thought. Hold that thought. All right, we're looking at a 30-day chart for Halliburton. I like Halliburton. 30 days ago, we're at 33.86. Okay. A couple of days later, on the 10th of July, we're at the bottom at 32.63. A week later, the 30-day top at 37.08. Well, gaps down, keeps on going. A new bottom, not a 30-day bottom, but still. Okay? 30-day bottom is way over here. Here's a new bottom, okay? She shoots on up. Because what happens at a 30-day bottom? Well, we got the investor saying, wait a minute, this thing's too damn cheap. So we start buying it. We start buying it, and it gets a new 30-day high. Well, now we're over 37. Well, that's a nice increase. It's not that it's too expensive at 37. It's just that from the bottom at 32 to 37, that's a $5 increase. A $5 increase on a $30 stock. Well, that's close to 20%. Close. So it might be what? 18, 17%. Anything over 10%, you're going to get profit taking, in my humble opinion. So from 32 bottom, okay, 37, yeah, profit taking. Gaps down, keeps on dropping. Now we're at 32.75. Great. 32.75. Now we're at 34. That's only a $2 increase. Not even 10% yet. The numbers just don't lie. The bottom 32.75. We're at 34.40. Okay, not even $2. Well, a little over $2. Okay, so $2 on a $34 stock, not 10%. Okay, that's a good opportunity to jump into Halliburton. Do I have Halliburton written down for tomorrow? Okay, Halliburton officially written down for tomorrow. Thoughts on IWM? IWM. Never heard of them. Usually, when I say I've never heard of them, it's usually a no. All right? Now, this one has daily options. Daily options? Wow. I don't think I've never traded daily options. IWM. Yeah, that's the Russell 2000 ETF. Look at those dividends. Interesting. All the way back to 2000. Now, I'm going to read some of these dividends to you, and you let me know if these are increasing or not. 3, 18, 22. Well, that's 3 in the right direction. Now it goes from 22 to 10 to 14 to 15 to 14 to 6 to 12, 13, 19, 8, 12, 19, 12, 10, 15, 13, 21, 27, 15, 20, 26, 17, 11, 23, 15. These things are all over the place. No consistency to the upside whatsoever. And look where the chart is. It's close to the high of the year. It's going to be a no. Sorry. IWM is a no. Your residents, it's better to look at dividend percentage than the increased dividend, the absolute price. All right, I already talked about that. I don't like the dividend percentages. I like the consistency of increase in dividends. Okay, so when a company decides on increasing or decreasing the dividend, it's usually year over year. Okay, so how did it do in 2000? All right, great. How did it do in 2001? How did it do in 2002? How did it do in 2003? The differences between 2000, 2001, 2003, how often are they increasing those dividends, and are they increasing them every single year? The consistency of increased dividends, as opposed to the, what was he talking about? The stock price changes because of the change. All right, no, I forget. All right, anyway. Felix, do you sell puts outside this strategy? Yes, I do. But I don't talk about them here because it's totally different. Wildcat, DKL. I never heard of DKL. That's a no. Dina Ladden. Good night, guys. Thank you again. See y'all tomorrow. The Searles family. Way to go. Vinny, don't wear that shirt. It blocks the footnotes. Oh, all right, Vinny. Uh-oh, I missed some questions. Great singing. Oh, my goodness. All right, Nestle doesn't have options. MGA. Take a look at MGA. I haven't even heard of that one. Oh, wow, we only got a few minutes left. All right, MGA. MGA. No, that's a no. Sorry, MGA. Sorry, no. AMD. Didn't we take a look at AMD for a while? Advanced Micro Divisions. There was a reason why we said no to AMD. AMD. Yeah, no dividends. That's why we said no to AMD. Sorry, Flipper. Sheila, if you already own the stock, can you show how to sell options since it's only one step? Well, of course. Hold on, Sheila. Let's go back to here. Tra-la-la. All right, so Kohl's. I own Kohl's at 23.23. Let's pull up the chart. Kohl's. KSS on Kohl's. Ooh, take a look at that. All right, now Kohl's, interesting position. That's it. I'm into it at 23.23. Way up here. The stock is way down here. So more than likely it's going to go to the upside. So I wouldn't want to sell anything lower than the 22. Because could it go past 22? Yes, it could. Could it hit 23? Yes, it could. But what are the odds and probabilities of it going from here all the way up to there? Well, I like to take a look at these numbers right here. Now, see the R right there? Okay, you got the date, the open, the high, the low, the close, the R. R means the range. How much has it moved from the bottom to the top? Great. If anybody knows what the Y means, okay, 22.20, I have no idea. Oh, that's where it is. All right, you see where the crosshairs is? Wherever the crosshair is, see 22.24, the Y is the 22.24. Okay, so as I move it higher and lower, okay, right there, 22.44, 22.44. So as soon as I move the crosshairs, see, 1997, 1997. Cool. I just learned something new today. All right, so what are we looking at? Kohl's. All right, Kohl's, here we go. Kohl's, there we go. Now, I said I wanted to do the 22s. 22s I'm only paying 9 cents, not a lot. But I don't want to go too close to where the action is. The action is right here at the money. At the money right now is the 20.50. Okay, it's just at the line. Okay, so I want to go 2 to 3 strikes out. 3 strikes out is the 22. And the 22 is only paying 9 cents a share. Now, I could hold back on it to see what she opens up on Monday, because if she opens up higher, well, this number is going to increase. If she opens up lower, that number is going to decrease. So we just got to keep our eye on it. All right, and then I just sell. Okay, now I have 4,800 shares. So I go there, and then I go boom, boom, 38, and I hit click and share, and then I read off the trade. Sell 48 Kohl's to August 24. That's this coming Friday. The $22 call and the limit order, whatever that's going to be, good till cancel, blah, 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 all that kind of nice, neat, fun stuff. I'm not going to do that one. I'm going to wait for it to open to see what it opens up at tomorrow. That gives me a better idea of what I want to do before I do anything. I always want to make sure the numbers work in my favor. That being said, let's take a look at the next one. Now, we got a few minutes left. So what do we want to look at next? Okay, a couple more questions. What do we got? Mara, for me, still high. Damon, you don't like Mara? M-A-R-A. Okay, I'm not quite sure why you mean Mara is still high. Okay, 90-day bottom is way at 14. Take a look at it. Hold on a second. Okay, now I'm not understanding why you think Mara is too high. The 90-day bottom's at 14.12. She went up, she pulled back, up, 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 pulled back. Big up, pulled back, now she's going to the upside again. Now I'm not quite understanding why you think that's too high. Because look, all the numbers are telling me what the numbers are telling me. 28th right here, last 30 days. Okay, 30 days ago we're at 1982. She shoots up to 22.97, drops back down. There's our 30-day bottom at 18.74. A couple of days later, 27.43 was the high. She drops back down to 20. Okay, that's a $7 drop. A $7 drop on a $20 stock is more than 20%. I don't know the exact number, but we could do that really quick. Clear this. 7 divide 27. That's a 25% decrease. A 25% decrease from a couple of days ago. Okay, from the on the 17th of July, 27.39. 30-day bottom, 19.95. That's a 25% drop. What do you think is going to happen after a 25% drop? Well, there's going to be escalation. People are going to start jumping in on it. Well, they already started on Friday. They already started moving up. But that's, you know, if it's too high for you, great. I don't ever tell people what to do and what not to do. If you think it's too high for you, great, not a problem. Invite Calvin Hill. Let's invite Calvin Hill. Come on, Calvin. The invitation is sent. Denalidan. Hi. Are you sometimes doing covered calls 2 weeks out? Not usually. Very rarely. AMD paying good premiums, but rated F. All right, Flipper. Well, you know where I stand with AMD. New trader here. Any tips? Yep. My tip for new traders is keep coming back and learning. Keep learning. If you find something interesting, the main thing I need you to take away, this is just me, the main thing I want you to take away is, does it make sense? That's it. Does it make sense? Does buying a good quality stock, selling someone else the rights for a safe, predictable, consistent 1% per week, does it make sense to you? It's not right for everyone. And if you're looking to make a whole bunch of money from this trading strategy, you're in the wrong place. This is boring, this is slow, this is repetitive. This is only 1% per week. That's it. That's all this strategy is for. Granted, that 1% a week does come to 50% per year. Okay, and if you don't have 10 or 15 minutes a day to to take care of your personal finances, well, this might not be for you. You know, lurking guy. Have you ridden the Serve train? Service Robotics has made me a fortune in 1 month. Well, lurking guy, good for you. Damon, MGA Dividend. MGA? What the heck is MGA? Do I even know who MGA is? MGA. Magna. No. I don't do monthlies. Grill bit. No, it's a month. Look, this is what you call monthly options. 16 August, 20 September, 20 December, 17 January, 21 March. There's no weeklies there whatsoever. No. Walmart CEO sold over $2 million shares on Friday. Okay. WMT. Well, I would too. Did you just see that? Take a look. It's at the high of the year. Why the hell wouldn't you sell your stocks on Friday? Hello, happy new week. Your thoughts on margin calls? I've got plenty of margin calls on my day. I prefer not to get them. Yeah, margin call just means your stock is going the wrong direction. Can you believe that SPY cash secured put 10 strike out of the money is paying 167? All right, Flipper, I don't pay attention to the spiders. Sorry. Lurking guy, Serve. I've never heard of Serve, but let's check it out. S-E-R-V. Serve Robotics. Yeah, that's a big fat no. Sorry, dude. I don't play that game. I like safe, predictable, consistent, no way to lose. That's what I like. Okay, this here, number one, has no options. Number two, last week it was at $1.90. Now it's at $13.22. Great. I am glad that you made a nice profit off of it. I'm glad for you. Okay, that's not my game. I don't want to sit in front of the computer looking for stocks that are going to do this. And then what am I going to do? Put a couple $1,000s in there and wait for it to move? Well, what happens if it doesn't move? Okay, why did this thing move on the 19th and it didn't move on the 10th of last month or the 13th of last month? Why was it perfectly flat for the last, well, let's go all the way back as far as we can go. Why is it only going back to April? It's only going back to April. Why is that? No need to apologize when don't make your list. All right, Johnny Q. On Think or Swim, how does it list your dividends on the calendar? Is it watch list or actually owned? Well, let's go actually check. Why the hell not? Okay, on the calendar, we go to Market Watch, to the calendar, and we click on this little, it looks like a little gear or a little sunshine way up there. You see it? Way up there? You click on that, and it comes down to personal, because it's going to be your personal list. Okay, and this is my personal list. My 100-year-old companies, calendar spreads, dividend aristocrats, dividend champions, dividend contenders, dividend kings, so on and so forth. These are all my lists right here. Okay, this is how they're listed. Okay, how yours listed should be the same way. So what's the best dividend stocks at 20-year-old? KBX Swift, couldn't answer that question for you. I don't know who you are. But my best dividend stock this year so far is Macy's. But that's just for me. That's not for you. Alrighty, here we go. Johnny Q, you love that shirt? Eventually they will be available on my website. Me and my boy made $13,000 in a day off Johnson & Johnson calls last Wednesday, I believe it was. All right, GSB, that's cool. I think Sheila's asking about trading covered calls. All righty. PSNY. Oh my goodness. Is it really going to be one of those? PSNY. You notice I'm not excited about this? No. Absolutely not. Okay? Now, you guys can do whatever you want. When I say I want dividend stocks that have consistently increased their dividends and have weekly options, and you're giving me something like this, I can almost guarantee with 100% certainty a 75-cent stock is not paying dividends and consistently increasing them for the past 20 years. That's a no. What the hell are you thinking? Why the hell are you wasting our time with something like that? That's what I got to say about that one. All right, Gunnery Gallery is it's the y-axis. Lurking guy, because x equals y. All right, you guys are, your own conversation there. I have no idea what that means. Does seasonality work on a daily or weekly basis too? Not necessarily so, because a seasonality just gives you an idea of what the stock has done historically. Now, what you can change here is you can change the 1 year to 1 day. Okay, that's what it looks like for 1 year. Well, what kind of historical is that? It's only 1 year. All right, or I can, whoops, I can change it to 3 years one day. So that's what it looks like for 3 years. That's what it looks like for 5 years. Okay, that's what it looks like for 20 years. It all looks basically the exact same. But I like 10 years one day. Kraft. Ari, you want to take a look at Kraft? That's KHC. KHC. Interesting. First thing I want to look at is what can I buy it for? 33.57. The 33s are going for 73 cents. That's well over 1%. All right. So Kraft Heinz a year ago was sitting at 36.25. The bottom of the year was in the middle of October at 30.73. The top of the year was 38.96. That's not a lot of movement there. I mean, take a look. The bottom of the year was 30.66. The top of the year was 38.92. Well, the company's over 100 years old. What is that, a $9 move throughout the whole year? That's not a whole heck of a lot. All right, so for the last 30 days, take a look at that. Yeah. So 30 days ago, we opened up at 32.40. Bottomed out on the 11th of July at 31.58. Topped off at 34.42. And that was last week. Nope, the week before last. So she drops, shoots back up again. Yeah, it's not hugely clear where it's going. It looks as if it should be going up. Okay, that's what it looks like. What does she usually do this time of year? Well, this time of year, she's going to go a little bit to the downside. All right, look, here's where we are now. All right, let's get the crosshairs in order. Okay, we're going to go sideways for a couple of days until the end of July, and then in August, she's going to drop a little bit and then go back up again. Okay, so either you like Heinz, Kraft Heinz, or you don't. At 33.47 to 33.50s are going for 73. That's over 2%. If you like Kraft Heinz. I'm going to actually write that down because Kraft Heinz is a dividend king, and they have been in business for over 100 years. KHC. That being said, let's move on. All right. I'm just going to answer the questions. No more stocks for the night because we're past 11:30. We only got a couple more questions to go. ASO, Damon, 67 to make 65 share. All right. Gary, ASO, never heard of it. Johnny Q, how's it going? Jerry, how you doing? All righty. Puts for September, paid, cool. ASO, thoughts on SoFi? SoFi, we looked at it, it's going to be a no. HP, is that Heimlich and Payne or Hewlett Packard? I had margin call during the .com crash. Fun. All right. Yeah, but did you get a margin call that sounded like this? Are you ready? Hello, Mr. Gardino? Yeah, you're done. We got to liquidate your positions to cover your losses. I've never heard anybody get it. Hey, Mr. Gardino? Yeah, you're done. That was it. Hey, Mr. Gardino? Yeah, you're done. That was funny as hell. It hurt. It was $91,000 down the tubes. HPE or HPQ. All right. That stock is the reason the shirt was made. Yeah, more than likely. What's your thoughts on Google? Yeah, that was a no earlier today, and it's a no now, and it'll be a no tomorrow, and it'll be a no next week. Okay, the numbers just ain't there. Okay, I'm looking for a safe, predictable, consistent 1% per week. I use pre-qualified dividend stocks, and those are companies that have consistently increased their dividends to their shareholders. Absolute worst case scenario, if and when the stock market falls apart, these companies have consistently increased. They've seen World War I, World War II, Korea, Vietnam, the stock market crash, the Great Depression, the oil embargo of the 70s, the credit crunches in the 2008s, the pandemic in was it 2021, all the wars in the Gulf, the Gulf Wars, and Afghanistan, Iraq, Iran, Kuwait, all that crap we have seen since the last 100 years, and these companies are still increasing their dividends. Those are the only ones I like, plain and simple. Now, if they're in an upward trend, great. If they're at a high, hell no. If they're at the bottom, well, I want to keep my eye on it. Watch it find the bottom, turn around, go back up, then I'll jump in. But as long as the numbers work, as long as the numbers are consistent, I'm okay. I'm perfectly fine with that. I'm not looking for capital appreciation. I'm not looking to buy a stock at 31 and waiting for it to go up to 40, 50, or 60. I'm not. I'm looking for 1% only every single week. Safe, predictable, consistent. You guys have a great day. I'm out of here for the day. It is 11:45. I'm going to turn into a pumpkin soon. And you guys don't want to see that. All right. You guys have a great day, and we'll see you again tomorrow. For those of you guys on the morning trading group tomorrow live, we'll see you tomorrow morning live. Bye. See you tomorrow. Way to go. All right. Out of here on Facebook. See you later. Instagram. Ciao bella. All right. Johnny Q. Good night. And out of here for TikTok. And now. And for you guys here on YouTube, see you.